Hello everyone, my name's Henry and I've been trading options for over 8 years now, and in this video I'm going to visually and comprehensively show you put option trading. I'm going to give you some examples and I'm going to show you exactly how I make up to $8,000 a month selling put options, and at the end of the video I'm going to place many trades while explaining exactly how and why I pick certain options along with my profit from the trade. Make sure to stick around to the very end to become a master at collecting weekly income with options. My one promise to you is that in this video, if you're able to focus and commit, I'm going to dramatically increase your portfolio income. All at the same time, you're gonna have a new perspective on entering stocks and how options work. Before I jump in, I appreciate a quick thumbs up, and with that being said, let's jump into being aggressive about our learning. There are basically two reasons to sell put option contracts. One, to generate income, and two, to acquire shares of a stock at a discount to the current market price. The standard definition of a put option contract is that a put gives the holder or the buyer the right to sell 100 shares of stock at a specific share price by a set date. Basically, there are two ways of viewing short puts, or in other words, the strategy of selling puts. One, being paid to insure someone else's stock, and two, being paid for offering to buy someone else's stock. I really like the insurance analogy because the insurance industry is profitable, and selling puts is a secret way that Warren Buffett actually became rich with his Geico company. Warren Buffett invested all of the Geico money that he was pulling in through premiums, just like I'm about to show you guys. In the example I'm going to give you, insurance translates well because puts are basically insurance for the share price of a stock. If you own 100 shares of XYZ company and you purchase a put at the strike price of 100, you can exercise the contract up to the expiration date and put the shares to the put seller at $100 per share. In other words, you're insured at the $100 share price level no matter how low the stock trades. You can exercise your contract at any time you want and force someone else to buy your shares for $100 per share. Even if the company goes bankrupt, you're guaranteed $100. But what I'm going to explain to you is being the person that sells the put and consistently collects that premium. This form of insurance or put selling is both lucrative and safer than just being a stock investor, as we'll see. But first, let's look at some key definitions, terminology, and examples together. Like a lot of specialized topics, options trading has its share of jargon, but once translated into English, it's actually very easy to understand. The first is strike price. This is the price at which you're insuring the underlying stock. If the stock is trading at or above the price at expiration, the put will expire worthless. If it closes at the expiration below the strike price, you will automatically be assigned the shares. These are basic definitions. Later, we'll explore the incredibly flexible nature of managing short options. Next, we have expiration date. As you might expect, this tells you the duration of the trade. Just as a traditional insurance company is only valid for a specific amount of time, so are options. Option contracts also have ending dates. Depending on the stock, you can select weekly expirations for options or ones that don't expire for months or even years. I'll explain later which ones are the most profitable. Next, we have premium. This is actually the fun part because this is the amount that you get paid. Option prices are listed in what's called an options chain, which includes the market maker's current bid and the current ask price. It's very similar to stock quotes, but since each contract represents 100 shares of the underlying stock, to convert to a total dollar amount, you'll need to multiply these prices by 100. Every time you see a price for an option, you just multiply by 100 for each contract that you're trading. And if you sell a put option contract for $1, for example, that would actually be $100 upfront. Last, we have assignment. When the owner of a put exercises his or her contract, someone is on the other side of that transaction being assigned the shares. This is one of the biggest fears of those newer to the strategy, but it's often an overblown fear and very easy to avoid. I'll explain more of that when we get into the live trading session that I'm going to do for you guys today. A common question is, how can you sell something that you do not have? Selling something you don't own creates a short position. Hence, when you sell to open a put option, you've established a short put position. In one way that's similar to shorting a stock, but where it can be confusing, is that short sellers benefit when a stock declines, while put sellers benefit the most when a stock doesn't decline. Selling a put is also referred to as writing a put, and I find this to be a more helpful way of viewing the trade because it aligns more closely to the insurance analogy. You're writing a put in the same way that your insurance company writes an insurance policy, which you then sign and you buy. Keep in mind, whatever gets opened must eventually be closed. So a sell to open put selling transaction will eventually be closed in one of three ways. The first way is the put expires worthless if the stock closes at or above the short put strike price at expiration. 2, the put holder exercises the option and you're assigned the shares. 3, you submit a buy to close transaction. This last one is where the great flexibility of put selling starts to come in, because you're always free to buy back the put you previously sold or wrote at any time. There are many reasons why you might want to buy to close a short option position: cutting your losses on a trade, exiting early to lock in profits, or as part of a rolling adjustment strategy. I cover rolling options in more detail in my coaching and options course as a topic as it gets more complex. Before we move into an example, here's a few more important points to make sure we're on the same page. You sell options at the bid price to collect income and open a short put option you are selling to open. When you're ready to close, you buy to close at the ask price. There's also a big difference between selling puts for income versus selling puts to strategically buy a stock at a discount. As we've already discussed, selling or writing puts is often compared to being your own miniature insurance company. But instead of insuring someone else's car or house or bike or whatever it may be in their life, you're insuring the shares or price of their stock. If the stock in question cooperates, you can make some very good short-term returns. If you're primarily drawn to put selling because of the great short-term income the strategy can produce, you're in the right place. However, even when the stock falls, you're not limited to buying your put back for a loss. When you sell a put, you need collateral equal to 100 shares of the put you're selling. This is because at expiration, if the stock is below your put price and you decide not to close your position, you will be assigned the shares at the strike price. The beauty of this is, if you don't mind buying the stock at that price, you're not in a really bad position. In fact, heads, you win; tails, I'm fine with the situation as well, because you want that stock to begin with. Say you sold a put at $100 when Apple was $130 per share. At expiration, let's just say that Apple went down to $98 per share. If you believe Apple will make it back to $130 or at least even $120 in the near future, you've just bought yourself a huge discounted stock that you're excited to own. Had you just bought it as a regular stockholder at the time and you didn't sell a put, you would have lost $30. Selling a put, on the other hand, you're $28 better because you only lost $2 where the stockholder lost $30. In actuality, you might have lost even less since you collected money for selling the put to begin with. Now I'm going to show you guys some live trading of how I utilize this option strategy every single week to make thousands of dollars. Let's see how much premium I can collect while I walk you through my exact thought process. Now here's some key takeaways to magnify your results further. Anytime you're selling puts for income rather than stock acquisition, I think you definitely need to incorporate at least a basic level of technical analysis. I've shown you some basic technical analysis, and I would recommend you try to use another indicator as well. I personally find value-oriented stocks a whole lot safer to insure than growth or momentum stocks. However, in the trades that I've made, I was looking for more outsized returns with higher risk. The premium is higher for stocks with more volatility. Finally, if you do choose to sell puts on a growth or momentum stock, it is wise to keep your position size small and grow it as you gain more confidence. All right, guys, so I'm going to be trading about $175,000 today. Let's take a look at all of the different tickers that I have here, and let's pick a good stock to sell some puts on. So essentially what I'm going to look for is stocks that are kind of falling a lot today that I want to own. And when I'm looking through today's stock list, a lot of stocks are down. So today is a fantastic day to sell some puts. All right, so I'm taking a look at Apple, and I'm kind of a fan of Apple. So I'm gonna click into Apple, and I'm also gonna go to Yahoo Finance, and I'm gonna pull up the Apple chart just so I can do some technical analysis for you guys and show you what I look for when I'm selling a put. So here I am, I'm in the charting feature, and I'm actually gonna get rid of this Bollinger average. I'm gonna show you guys what Bollinger average means in just a second. So the first thing that I want to do is I want to take a moving average of Apple and see where it has been trading for the past maybe 30 days. So for this period, instead of 50, which is the preset for Yahoo Finance, I'm going to put 30 instead. Now I have a line here that shows me the average price that Apple has been trading at for the last 30 days. As you can see, Apple is trading below the 30-day moving average. Now I'm going to go over and I'm going to go into indicators, and I'm going to click Bollinger Bands. And Bollinger Bands are just a simple way for me to understand where Apple is going to trade in terms of its high point and its low point in terms of its standard deviation. All that really means is where Apple is likely to be traded based on this indicator. So after I use this indicator, you can see that Apple is near its low of the Bollinger Band. Now I also look at RSI, you can see here that it's 46, which means to me that Apple is somewhere in the middle of its trading range. It's neither oversold nor is it overbought. Now I see Apple had a lot of consolidation around the 119 level. So one time it was at 119, another time it was at 120. Again, it was around 119.99. So I see there's a lot of support for Apple right at the 120 level. Now I'm going to go back to Robinhood, and what I'm going to do here is I'm going to click trade Apple options. Now Apple is $128 per share, and what I'm going to do here is I'm going to go to sell put, because this is what the video is about. I'm going to show you guys exactly why I sell puts and what level I do it at. So this week is May 14th. However, I want to go out at least 1 month so I can capture a decent amount of premium and not have to trade weekly with this single trade. However, I'll show you more weekly trading in the next stock that I pick. But for Apple, it's a little bit less volatile, meaning that you don't really want to do weekly options because they're not going to have as much premium as a monthly option will have. So what I'm going to do here is I'm actually going to go out 1 month and go for June 18th. And now I'm going to take a look at the option chain. So this is what an option chain is. It gives you the strike price, it gives you the break even, it gives you the chance of profit, and it gives you so much more information. Now, I did tell you guys that the 120 level has a lot of safety and a lot of support around it. So for me, this looks pretty good. However, if you take a look at the premium, $1.51, or as I've said earlier, it's going to be $151 because it is 100 shares. Actually, this is a decent return. It's just slightly over 1%, but in a month, I want to make a little bit over 1%. So for me, the 120 level is just not risky enough. Also, if you take a look at the 122.5 strike, you can see here the break even is actually $120.41. That's because when you take the strike price and you subtract the premium that you collect, your actual break even price would be $120.40 because of that premium that you collect. For me, this is a much more safe trade. However, it does have some decent premium and I do want to have this in my portfolio. So this is a great example for me to show you guys. So what I'm going to be doing right now is I'm actually going to click this little plus sign right here, which tells Robinhood that I want to sell this put option. You guys can see now that it says short put. Now, all you really have to do is click continue, and I'm going to enter the amount of contracts that I want to trade. For me, I want to enter 3 contracts because I have a decent amount of money sitting around and I want to execute 3 contracts. So here I go, I click 3 and I'm going to put the bid price, which is $2.08. So $2.08 is the bid price and $2.11 is going to be the ask price. Since I'm selling this option, I'm going to go for the bid price, $2.10. I'm going to review this trade real fast. And Robinhood is asking me, are you sure you want to buy 300 shares of Apple at $122.50? Notice they're saying that because when you sell a put option, you're committing yourself to buy the stock at the strike price. So Robinhood knows this and they're asking me, are you willing to purchase the stock at that price? And since I just showed you guys that on the technical chart, I would be happy to own Apple at an average price of about $120. I'm happy to place this trade. This trade takes up $36,000 of my capital. So there you go, guys. I just collected $636 for the first trade. All right, now let's find the next stock that I want to trade on. So what I do here is I'm going to go to Yahoo Finance and I like to look at the trending tickers because usually when a ticker is trending, then it actually has a lot more premium to it since more people are interested and it has more volatility. But what I see today is that a lot of people are interested in Dogecoin and Ethereum, but I do see Alibaba on the list. So I'm going to click Alibaba and see what's going on. So Alibaba is selling off and it's down 2.88% today. What I'm going to do again is go to the chart. I'm going to do the very same analysis that I did before. Now, what we can see with Alibaba is for some reason it's selling off significantly. I'm not going to do a lot of fundamental research in this video. However, I'm going to do a lot of technical research because that makes life a lot easier and faster to trade stocks. And I'm also familiar with Alibaba as a company and I know they're a very good Chinese stock. What I see right off the bat is Alibaba is trading way below its Bollinger Band and it's actually at 34 RSI, which means that it's nearly oversold. Another thing that I'm going to do is I'm actually going to zoom out of the 3-month chart and go to the 6-month chart because I want to see how low it's been. And what I can tell here is that right now it's at its all-time low for the past 6 months. What this means, it's a great time for me to sell an at-the-money put, which means that I'm going to be selling a more aggressive put and collecting a lot more premium. Going back into Robinhood, I'm going to type in BABA as a ticker symbol and I'm going to pull up BABA. Now again, I'm going to trade BABA options. I'm going to go sell, put, and this time I'm going to trade a weekly option because I promised you guys to show you a weekly option. This option is going to expire on this Friday. Now what I'm going to do is I'm going to pick an option that is near the money because I don't think Alibaba can fall that much more. Here, Alibaba is trading at $218. What I'm going to do is I'm going to eyeball and see which option contract I think has a decent amount of premium but isn't too aggressive. So I could sell an at-the-money put at the 217 level and collect $453, which would be about 2% in just a few days. However, I don't want to take that much risk because the 212.5 level still has a lot of premium. In fact, it still has over 1% premium in less than a week. So what I'm going to do is I'm going to click this and I'm going to continue. And again, I'm going to pick one contract and I'm going to put in the bid price of $2.56 or $256, review this trade and put it in. And actually, as I'm putting in this trade, you guys can already see that I have to go in and cancel this trade. Boom, I'm gonna cancel it because the bid price has fallen quite a bit and this is a very volatile stock today. So instead of 256, I'm going to put 254 and quickly review this trade and hope that it goes through. Submit. And boom, we got filled and I collected another $254. The next stock that I want to trade is Square. Square is another favorite stock that I have on my list, and I actually have weekly options on it. Today is Monday, so I don't have any weekly options on Square. Therefore, I'm going to open it up and show you guys exactly what I like to do. So Square is $222 per share, and today I'm going to look at the Bollinger Averages, RSIs, and the moving average. No surprise, I have the same indicators I use all the time because I get so much information from these indicators. Now again, it looks like Square is near its bottom of the range. It's around $222. And the bottom of its Bollinger Band is about $222. Now, Square has traded as low as about 207 here, and again here at 201. And again, we had a crash here and it was about $202. So I can tell that Square has a lot of support around the 202, about 205 level. Now, the moving average is much closer to, if I zoom in, the moving average looks like it's around $229 per share. So what I'm going to do is I'm going to go to Robinhood and I'm going to sell a put option on Square. I'm going to look at the option chain and see which one makes the most sense. So I said at the $205, I'm very comfortable selling a put option. However, since the moving average was closer to 229, I am comfortable going a little closer to the money with this put option. So instead of the 205 put option, which only has $1.12, I'm going to go higher and I'm going to sell a put option at the 217.5 strike because I do want to own Square, and if it doesn't end up going this low, I'm very happy collecting $373 worth of premium. So again, I'm going to click sell put option, I'm going to click continue, and I'm going to enter 2 contracts because I really do like Square a lot and I wouldn't mind owning 200 shares of it. Now I'm going to put in a price of $355 or $3.55 per option contract. Now I'm going to review my trade. It's going to be a $710 premium that I'm going to collect, and I'm putting $43,500 to play. So this does happen from time to time. I'm not getting filled. So what I'm going to do is I'm actually going to click and replace my order instead. So $710 might be a little bit too much that I'm asking for. So instead I'm going to put a lower amount of $3.35 this time and only collect $670. That's what I get for being kind of slow, and submit. All right, so we just collected $670. All right, so the next stock I'm going to be trading is Peloton, ticker symbol PTON, and I know a lot of people are a fan of this company, so I'm going to show you guys an example of selling a put option. Now, if I take a look at the PTON chart, it has been trending a lot lower, but I do see a lot of people did sell off right here, and the stock ended up crashing down to $82. However, now it seems a lot of investors are jumping back in, and you can see that by looking at these 2 green lines. What these green lines means is that a lot of investors are coming back in and they're putting in some buying pressure on the stock. So now the stock was at $82, but it's trending higher at $85. So what I want to do quickly is get in at about $82 since that was the bottom of the stock. So it's going up very, very fast. So I'm going to do this example very quickly. And since this is the 4th example that you guys have already seen, I'm going to rush through it. So real fast, I know 82 is what I want. The break even here is 81, 81.28, perfect. I'm going to sell this put, click continue, put 1 contract, and I'm happy to get about 205 for it. Review, and you know what? Actually, 205 is too low, so let me cancel that real fast. I'm gonna go for somewhere around 214. I do think I will get filled at 214 because the ask is 237. In theory, you can honestly go somewhere in between the bid and the ask price. So I should get filled for $214 right now once this trade goes through. And boom, we got filled. So another $214 on the books, and the collateral that I used was $8,350. I hope that was helpful. Stick around because I got some very important keys for you to make more money and some best practices for you when you trade put options. One screen that has helped me is to look for quality companies with good fundamentals. If you decide to trade growth stocks like me, valuation is very important. You want to pick stocks that are not at their all-time highs, or at the very least, not at their price to sales ratio all-time highs, as at that point, it would be better just to buy some call options rather than selling puts. I've got a whole playlist on options trading that you can check out by clicking the end card in just a few seconds, and you can also check out the Weekly Option Income Academy for a full options trading education. If you like this video or have any questions, you can comment below or message me on Instagram. And if you want some personalized coaching, I'd love to help you out. I'm excited for your growth regardless, and I'll see you guys in a later video.
No one ever sees me.